The global data center sector is estimated to grow at a 13% CAGR over the next 5 years, which could result in more than 80 gigawatts of new capacity coming online. This equates to roughly $1 trillion in asset value creation globally, requiring $750 billion in new debt financing. Data center tenants will spend an additional $1 to $2 trillion to fit out their space with GPUs and networking infrastructure, meaning that global data center expenditures over the next 5 years could approach $3 trillion. Taken all together, it's safe to say that we are in the midst of an infrastructure investment supercycle. JLL continues to see significant capital raising for data center investment funds. The majority of funds remain opportunistic, where development yields can approach 50%. But now core strategies account for about a quarter of fundraising activity. This is up from less than 10% just a few years ago. This is a significant shift in a trend we see continuing towards 2030 as the sector matures. Global data center core fund capital formation could top $50 billion in 2026, with strategies targeting returns of 10% or more. Core funds can be separated into two groups: forward takeouts and stabilized cash flowing assets. These funds are likely to focus on mature markets, and the deployment of capital could take the form of partial interest transactions, single asset trades, portfolios, or even platforms. Investor surveys continue to rank data centers as one of the most interesting asset classes in commercial real estate, given the current supply and demand dynamics, as well as investment return profiles. However, there are some media headlines that point to limited investment sales volume and suggest that investor excitement is not manifesting. At JLL, we have a different viewpoint. If you could make annualized returns of 10% or more on stabilized data center assets, why would you want to sell? Since 2020, global data center investment sales volume has totaled $75 billion. However, this is only one avenue investors are gaining exposure to the data center sector. Since 2020, we've seen $300 billion of data center M&A. This includes platform trades, joint ventures, and equity investments. And the securitized debt markets, including ABS and CMBS, have also seen significant growth, roughly doubling in volume every year. In 2026, we could see data center ABS and CMBS issuance reach $50 billion. Based on our forecasts at JLL, we continue to see data centers as an attractive asset class over the next few years, and investors will have an increasing number of ways to invest in the sector outside of traditional asset acquisition.